China's President Xi Jinping is kicking off his first state visit to the U.S. with a stopover in Seattle this week. In a rare face-to-face, top Chinese government leaders will meet with U.S. tech execs like Apple's Tim Cook, Microsoft's Satya Nadella, Amazon's Jeff Bezos. Yet tensions loom. President Obama has hinted at new sanctions on China over cyber attacks, while U.S. officials are looking to strike a potentially groundbreaking cyber arms deal. Joining me here in the studio, Brian White, COO of RedOwl Analytics and cybersecurity expert. With me from Stanford, GGV managing partner Glenn Solomon, an active investor in China. So, Glenn, we've been getting dribbles about what's actually going to happen at this meeting in Seattle for days now. We know more about who will be there, in addition to the names I mentioned, Bob Iger, Indra Nooyi. What do you think can actually be accomplished at a meeting like this?
You know, I think, Emily, it's an indication of the interest amongst the tech companies in Silicon Valley in China that everybody who's anybody in technology is really going to be at this meeting. I think the dialogue will be somewhat substantive in that people are going to be given the opportunity to talk about their aspirations in China and develop relationships with members of the government who are important in entering China. But I also think you'll see, following this meeting, more activity, as we've already begun to see, whether it be from Uber or Airbnb, certainly Apple, now Google. More and more companies you'll continue to see enter the China market because it really is so attractive for them.
At the same time, Brian, the hack attacks keep coming. This potential cyber arms agreement that we're hearing U.S. officials talk about could potentially, prevent the Chinese or hinder the Chinese from hacking critical infrastructure, but it would have nothing to do with the theft of intellectual property, which seems to be the most serious concern right now. How optimistic are you about an agreement like this, and what would it actually accomplish?
Yeah, I think first it's fair to say that this is progress that they're even discussing cyber. It's not too long ago that this wouldn't have even made the agenda. Second, I think that what they're basically doing is an agreement to continue to negotiate. They're looking for some very early steps that indicate what they're willing to do. For example, China is perhaps going to say that they will not attack critical infrastructure, and we're going to put some rules in the road, basically some lanes about where fair play is. Because right now the key issue is that we have distinctions and differences on what is fair. We believe that you can engage in espionage for your government purpose, but not for commercial. And that's where the distinction with China remains.
But why bother at all, Glenn, for example, if businesses right now are the ones that are the most vulnerable to hack attacks coming from China?
Well, I think when you talk about cyber security and cyber attacks, you need to distinguish between state-sponsored activity and commercial activity. So in the state-sponsored world, it's fair to say that governments all over the globe are perpetrating cyber activity, whether it be our government here in the U.S. or the Chinese government or governments from all major regions of the world. You're seeing lots of state-sponsored activity underway, and there are legitimate, quote-unquote, legitimate purposes, espionage, and maybe there will be rules of the road that'll be established in agreements like the one that hopefully will come from the conversations underway between Xi and Obama. But then there's also commercial-oriented attacks, and I think the attack that Apple announced on its App Store this weekend is a good example of probably commercial activity, people trying to get access to information for whatever reason they may see, hopefully to get some profit out of it.
Brian, I want to talk to you a little bit more about this Apple hack attack that we saw over the weekend, a first-of-its-kind hack where they hacked the App Store in China, and specifically apps like WeChat, Didi Kuai, huge apps, and Chinese companies, no less. What do you make of this happening? How significant is it?
Well, first, we don't know who did it. But second, I think it's significant, and what it demonstrates is that they were able to find a way in. And this one was quite ingenious in that they had the ability to actually demonstrate advertising that you could get an access of Xcode through Baidu, and they were able to convince people to go there because it's easier to access than via directly from Apple. And then when they loaded up these new apps into the Apple Store, Apple did not catch that these were running fraudulent code. And what the code was seeking to do was actually try to steal your credentials, gather information to take those credentials and use them elsewhere. So I think it's significant, but the funny thing is it's not surprising anymore. We see these attacks over and over and over again, and I think it continues to demonstrate that nobody is secure here, and everybody needs to take some steps that they may not think is necessary to check the code, do application whitelisting, put other techniques in place so that they can also be part of the solution.
Now, obviously, I mentioned Alibaba at the top. There are some broader concerns, Glenn, about what's going on in the Chinese markets and volatility that we're seeing there. Alibaba has not fared well since its IPO, and today the lockup expired. You guys are an early Alibaba investor. How concerned are you about what's happening here, and what do you see as the long-term Alibaba growth story?
Great question, Emily. I think, in the short run, things like lockup expirations tend to hit companies in terms of their stock price, just because there's more supply that comes on the market. And as people anticipate that supply coming on, stocks tend to trade down. Actually, if you look back across many tech names, buying around this time is usually a pretty good thing to do. Stocks tend to react well in the months ensuing after lockup. And so you may see that Alibaba has a rebound in the not too distant future. But longer term, the story around Alibaba is really a story around growth in the new economy in China. And as you know, at my firm GGV Capital, we're very bullish on China, particularly the new economy within China. We think that there's really a dichotomy between old economy China, the state-owned enterprise, largely inefficient businesses where the stocks of those companies have tended not to do well on the local indices in China, contrasted with the new economy, the tech companies and tech-enabled businesses in China that are really seeing the same thing going on in China that we see here, where software is eating the world, software is eating the U.S. in many traditional industries, and the same things going on in China. So we're bullish long-term on that continuing to be the case, and we think Alibaba is a beneficiary of that long-term as well.
And quick last question, Glenn. Obviously, Yahoo is sitting on a huge stake, and there are some questions about how it would be taxed. But what do you think Yahoo's next move is here? We have 30 seconds.
So, look, Yahoo is really a very interesting business. It's mostly a tracking stock for Alibaba these days, and because there's now some glimmer of hope that Yahoo shareholders will be able to get access to that Alibaba stake, perhaps in a more tax-favorable way. You're seeing Yahoo react positively to that news. But I think long-term, Yahoo is in a very difficult position with respect to their underlying business. Lots of execs have been leaving and thinking about leaving. I just don't see a great way out for Yahoo as a company, their stake in Alibaba notwithstanding.